Hi, it's Mark Sebastian, your only option with Trade to Close. And today we're previewing FOMC and CPI. CPI is before the market open on Wednesday. The Fed is during the day with the all-important Jay Powell press conference taking place immediately thereafter. So let's look at what the market is expecting. We'll start with the S&P 500. The S&P 500 for the end of the day on Wednesday is pricing in about a $51 move. How do I know this? I look at the at-the-money call and the at-the-money put. And when I add them up, that's called a straddle, and that tells me more or less what the market is looking for a move, and they're pricing at about $51. I think that's probably about fair, maybe a little bit cheap, but not overly expensive or overly cheap. So kind of fair value there. So the Fed is going to move the S&P, it's going to move the market. But what is it going to move more than stocks? Bonds. And bonds are where I think there might be some value. So I want to look at TLT real quick. TLT is the Barclays 20-plus year bond fund. So it's essentially an ETF that tracks the long bond. And we're looking at how much they're expecting the long bond to move on Wednesday. And the answer right now is like $1. Now, I went back and looked historically. I pulled up a chart and looked back at some of the big Fed days. And generally speaking, the long bond moves way more than $1 on those days. I think this is too cheap. So the next area I want to look at, I'm not going to trade a trade that expires tomorrow into a Fed day because Jay Powell is going to get done speaking about half an hour before the close. I don't have a lot of control over that. But Friday's options are also really inexpensive. The Friday 91.5, we'll just look at the 92 straddle. It's about $1.50. It's about 10 cents in the money, so we'll call it $1.40. TLT was down way over $1 on Monday. It's up almost $1 on Tuesday. So I'm getting Wednesday's action, Thursday's action, and Friday's action to trade this, and they're charging me $1.40. Markets are underpricing this. So that is where I think there's some value, is looking at the bond market to play the Federal Reserve rather than looking at the S&P 500. So what can you expect out of it? Well, CPI is going to start some movement. CPI, especially if it's hot, markets are gonna be down, and then we'll see what Jay Powell decides to do. Does he come on his press conference and pour cold water all over this all-time high? There could be some good reasons for this. With the S&P at an all-time high, there's this concept called wealth effect. When people feel like they've got more money, they spend more. That leads to inflation. Might want to pour water on that. There's also still inflation all over the place. Look at your food prices. Look at what McDonald's costs. So maybe Jay Powell wants to pour cold water. Right now, there's pricing in a really high chance for 2 rate hikes in 2024. I feel incredibly strongly there won't be 2. I feel pretty good that there might not even be 1. We're going to get a much better feel for that on Wednesday. All right, folks, there you have it. You're watching me here on YouTube. Please like, subscribe, leave a comment or a question. We'll get at it, and make sure to sign up for our newsletter. We send you great content several times a week about market analysis, what we're seeing in the charts, all sorts of great stuff that'll help you in trading. Click that link and join our newsletter. It's called Trading Today. All right, folks, I'm Mark Sebastian with Trade to Close, and I am your only option.